morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Cash remittances jumped 3.7% in September, the fastest pace in 5 months, as OFW inflows hit $3.12 billion. A major shakeup in Malacañang. President Marcos names Ralph Recto as executive secretary, while Frederick Go takes over finance. Auto sales stall in October, flat year-on-year at just over 40,000 units, with EV demand unable to offset weaker passenger car sales. Monthly sales, though, rose 5.2%. Cash remittances from overseas Filipino workers jump in September, providing a lift to household spending and the broader economy. The Bangko Sentral ng Pilipinas, or BSP, reports a 3.7% increase to $3.12 billion, the fastest growth in 5 months. Month-on-month remittances rose nearly 4.84%. From January to September, cash transfers hit $26 billion, up just over 3%. The United States remained the largest source, accounting for more than 40% of total inflows. Analysts cite early holiday spending, a strong U.S. jobs market, and a competitive peso as the key drivers of the September upswing. The BSP says its full-year remittance target of 3% remains well within reach. The auto market hit a soft patch in October, with overall sales flat at about 40,000 units as weak passenger car demand dragged on industry momentum. Passenger car sales dropped 18.8% to 8,155 units, while commercial vehicles, nearly 80% of the market, rose 6.3% to 31,859 units. Within the segment, light commercial vehicles grew 3% and Asian utility vehicles jumped 17.2%. Electric vehicle sales surged 62% to 3,603 units, driven by a 73.9% rise in hybrid EVs and a 192.6% surge in plug-in hybrids, even as battery electric vehicles fell 25%. From January to October, vehicle sales slipped 0.2%, but commercial vehicles grew 7.9%, putting the industry at 76.68% of its 500,000 unit year-end target. Toyota remained the market leader with 185,201 units, followed by Mitsubishi at 72,734 and Ford at 18,631. Analysts expect sales to pick up in November and December, supported by year-end promos, lower interest rates, and improving consumer sentiment. Work flexibility has moved on from optional to essential, and the Philippines now ranks among the most hybrid-friendly markets in Asia, in the Asia-Pacific, that according to Colliers. Colliers' 2026 Workplace Insights report shows 82% of local organizations have adopted a hybrid setup, with the rest still deciding on how far to go on flexibility. The report also highlights key challenges: a hybrid paradox where companies offer flexible policies but still enforce traditional attendance rules, and persistent sustainability gaps in workplaces. Collier says that the move toward more modern workplace models reflects a push to attract talent, boost productivity, and position businesses for long-term growth. President Ferdinand Marcos Jr. has just formalized a major reshuffle in his economic team, naming Frederick Go as finance secretary and Ralph Recto as the executive secretary. The changes follow the resignations of Lucas Bersamin and Amena Pangandaman, both stepping down out of delicadeza after their offices were linked to the multi-billion peso flood control scandal.
Ferdinand R. Marcos Jr. has formally accepted the resignations of Executive Secretary Lucas P. Bersamin and Department of Budget and Management Secretary Amena Pangandaman. Both officials respectfully offered and tendered their resignations out of delicadeza after their departments were mentioned in allegations related to the flood control anomaly currently under investigation, and in recognition of the responsibility to allow the administration to address the matter appropriately.
Palace Press Officer Claire Castro says that the reorganization is meant to strengthen institutions and improve coordination across the government. Recto will now oversee day-to-day government operations as Little President, while Go takes charge of fiscal management and investor confidence. Meanwhile, Budget Undersecretary Rolando Toledo has been designated as the officer in charge of the DBM to ensure continuity. Now, with the political and governance environment shifting, many companies are reassessing their outlook, and commercial real estate is often the first sector where changes in business sentiment show up in real time. Joining us now to walk us through what she's seeing on the ground is Sheila Lobien, the CEO of Lobien Realty Group, a commercial and office leasing firm. Hi, Sheila. Welcome.
Hi, Maiki. Good morning.
Okay, let's talk about this sector. We're at a moment defined by massive corruptions, major shift in the president's economic team, and resignations in the executive and budget departments. From where you sit, how is this intense political landscape affecting your sector?
Definitely, it's affecting our sector. We still see demand, but it has slowed down. But continued demand still, especially in the office market.
Okay, let's go specifics. Let's talk about vacancy rates and rental rates. I understand this commercial leasing sector is still not quite at pre-pandemic levels. Yes. Where do we stand right now?
Right now, it's still at 19% vacancy rate, which is very high compared to pre-pandemic levels wherein we were enjoying 4 or 5% vacancy rate. Almost all the buildings back then were fully leased. So it's a different story today. Mm-hmm. But then, the rental rates, it's still very resilient and holding at 1,000 pesos per square meter average across Metro Manila.
Okay, why is that? Why have vacancy rates? Why are they at 19%? What's holding this sector back?
Well, number one, there's hybrid. You mentioned about work from home, hybrid model. Companies are still not fully making their people go back to their office 100%. And the outsourcing industry also, though there is demand, they are implementing work from home and hybrid setup. Mm-hmm. And of course, what's happening in the global and local environment right now affects demand and
yeah, absolutely. As it affects demand, tell us about corporate behavior. What exactly are your corporate clients doing right now with their office requirements?
They are right-sizing, looking for the best deal out there. So, instead of taking 100 square meters like in the past or 1,000 square meters, they can just do 500 right now. They have this hybrid type of model and work from home. Mm-hmm. So they're optimizing their space.
Yeah, thus the 19% vacancy rate. Across commercial and office real estate, what are the hard trends emerging right now, Sheila?
Right now, as mentioned, they are looking for the best deals. Whether they're buying or renting, they are looking for best terms. They still decide, they still want to expand, but slowly, testing the market. Some are entering with they're looking at temporary office space solution also. The co-working model is growing as well, not just here in Metro Manila, but all over the Philippines.
Mm-hmm. Another trend you mentioned when we had a brief discussion prior to going on air, you said that fit-out companies are now stepping in to provide financing.
True.
To help tenants shoulder the upfront costs.
Yes,
what does this
capital
signal? Yeah, what does this signal, Sheila?
It signals that BPOs, big multinational firms, and even local firms are cautious. So they do not just want to put out a big capital expense out there. If there are companies who can provide them financing and make the initial cost less, mm-hmm. they'll do that. So it's more on an operational expense model.
Yeah. How widespread is this trend, this fit-out?
We see that in the last few quarters, especially this year.
Okay.
They want more of that. And even big firms are going through that, taking that, so that they can manage their risk also.
Yeah. What does that tell you about the state of commercial leasing today?
There is still demand, as mentioned, but it has slowed down. Expansion happening outside Metro Manila. So companies are managing their risk, that's number one, managing their cost. But they still believe in the Philippines, mm-hmm. because we still get a lot of inquiries, we still get a lot of demand also. But the demand is, getting smaller because they're also decentralizing.
Yeah, as they decentralize,
yes.
Sheila, what are the hottest hubs now, apart from the CBD, as they look outside Metro Manila?
the Visayas. So Cebu is always there. Near us is Pampanga, very accessible and a lot of talent. They always look for talent first and then the infrastructure around the city or around the area. That will
That's right.
support their
Yeah,
growth.
of course, they need that talent first and foremost. Talking about interest rates, the BSP has been cutting interest rates 175 basis points since August of 2024. Yet growth in the third quarter was still lackluster, dropped to 4%. Expectations were for much higher growth. The BSP meets one last time for the year this December. Would a deeper rate cut, people are talking 25 bips, some want 50. Would a deeper rate cut really help your sector at this point?
As mentioned earlier, back then, pre-pandemic levels, we were enjoying 4%. So if we can go back at that level, then I think that would really help the sector, not just the office market, but the residential market as well.
Okay, speaking, you mentioned residential. So I know you focus on commercial and office spaces, but I wanted to ask you, given all of the, the corruption allegations, I hear from property developers that demand for high-end luxury developments has softened. I know you dabble a little bit in this as well. Can you tell us about what you're seeing and what you're feeling on the ground on the high-end residential side as in the wake of all of these cuts in spending from, the people that buy this stuff?
We see a slow demand in that market, high-end residential, because very few families are, who can afford that. And these are just, the 10 big, family names. And of course, those who are involved in this scandal and all that. So yeah, we feel that. But the mid-market, the low cost, the house and lot,
board, Sheila,
still growing.
Across the board, a weakness in the luxury segment on account of the cuts in government spending, on account of the corruption probes, would you say?
Yeah, we see that.
How drastic, how much slower has it become?
Probably, 10, 15% from that up to
10
now.
to 15%,
Yeah.
okay.
And there are very few developers specializing on that high-end market.
Yeah.
Many are focusing on the mid-market and the low-cost housing, and that segment is still growing.
Well, the demand
a
there
lot
will always
of
be
housing
buoyant.
requirements for many Filipinos.
Okay, on the flip side, at the top of the commercial market for premium and grade A offices, what is the demand there like?
Very stable right now. A lot of big companies, multinational firms are always after or looking for green buildings because it's part of their mandate now to go and look at buildings with
what used to be a perk is now an absolute requirement.
It's a requirement. It's a must. So they have to be in a green building. So buildings that are quality, green, they are doing well. They have recovered. Rentals is very stable, and the demand is there. So it's good.
Okay.
So old buildings should upgrade, and if they can, make it green if that's doable for them.
Yeah, absolutely, to attract the foreigners, the
Yes.
multinationals, and the BPOs. Speaking of that market, is foreign investor sentiment in the broader market has really softened.
Yes.
How are you feeling it? How are tenants behaving in the commercial real estate space?
As mentioned, they're very cautious. So there is still demand, but it has slowed down. And they are now, as I have shared, looking at support. So fit out companies who can provide financing, that's one. And if they can expand, they expand slowly. Like if they can postpone it to 6 months after, they do that. But they are already looking at 2026.
Yeah.
So we see that it's going to be an improvement.
And if you could enumerate, Sheila, what's driving the slowdown locally?
Well, locally, the political environment, the unstable, growth rate also. Because when we were growing at a steady 5.5, 6.5% annually, we see a continuous increase in demand also.
Yeah,
So
we need that growth
we
to
need
prop up
that,
demand.
yeah.
Okay, Sheila, let's talk about the cabinet shakeup. I know you're not a political analyst, but from a commercial real estate point of view, Frederick Go is now in finance, Ralph Recto stepping in as executive secretary. How do changes like these affect confidence?
Definitely, it will affect the sentiments of our clients and many people out there. But of course, we are looking after the government, really running after the people who are liable. We want them to be accountable for what's happening, right? That would help. It means the government is listening to the public, and hopefully that will make more demand for us in the real estate sector.
Okay, Sheila, finally, for brokers, landlords, and individual sellers, can you give us a practical tip on how to close a deal in today's environment?
You need to have a good advisor like us, but really you need to do your homework. In a market like this, there are a lot of opportunities. Good deals are out there. So if you're a landlord or a developer, you have to be flexible today to maintain your tenant so that they will not look at other options. Give them good deals so they can come to you. And of course, upgrade your building. As mentioned, they want a building that's green. So if you can't do that, upgrade and make it better. And then for those who are buying, it's a buyer's market, it's a tenant's market. So you can start negotiating your leases with your landlord to get a good deal. You can consult an experienced real estate broker to help you navigate these uncertainties. And then, of course, if you're buying, cash is king. There are a lot of good deals out there. You just have to look for it. And again, do your due diligence.
Yeah, absolutely. Always due diligence. Yeah. And in one word, how are things shaping up for 2026, Sheila?
It's moving up. I think optimistic but cautious.
Cautiously optimistic.
We see movements in other parts of the real estate market. Like, as mentioned, hotel market is also moving up. The warehousing logistics market is good. The low-end, mid-market residential also is improving because Filipinos would always want to have their dream home.
Yeah.
So that will never go away.
Thank you so much for your time today, Sheila Lubian.
Thank you.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how markets in the West performed overnight. On Wall Street, stocks traded cautiously as investors awaited earnings from retailers and chip giant Nvidia and a long-delayed U.S. jobs report due this week. Over in Europe, traders took the same guarded stance ahead of that key data. And this morning, we're watching how these global signals could shape trading over here in Asia. Now, let's take a look at how Asian markets are doing. They're following the modest losses yesterday after the government reported that Japan's economy contracted 1.8% annually in the July to September quarter. Right now, the Nikkei 225 is sharply lower, down by about 2%. Hong Kong's Hang Seng Index down by 1.3%. Shanghai's Composite down by 0.6%. And Singapore's Straits Times Index lower by just 0.1%. Here at home, the PSE Index climbed 3.5% yesterday, but the recovery remains uncertain amid political and governance risks, especially after yesterday's changes in the economic team and Senator Amy Marcos's explosive accusations. Taking a look at the main gauge as of 10:24 this morning, the PSE Index is flat with a very slight upward bias, up by less than 0.1% to 57.82. All shares index is going the other way, lower by 1.2% to 32.41. Taking a look at the sub-indices, we're seeing a mixed picture here. The financials and the holding firms are, limiting the market's decline, whereas the industrial, property, services, and mining and oil counters are in the red. Total volume is very thin at 67 million shares, valued at just 490 million pesos. Market breadth almost neck and neck. We've got 56 advancers, 54 decliners, and 57 stocks unchanged, which just goes to show that, the bears and the bulls are battling it out. Nobody really knows where to go from here. This as the political tensions are high after Senator Amy Marcos accused her brother of drug use, a claim Malacañang is denying. It's a development nonetheless that could add selling pressure to the PSEI. Moving forward, even after it closed in the green yesterday. The government has also confirmed a major cabinet realignment, with Ralph Recto now serving as executive secretary and Frederick Go taking over as finance secretary. On the currency front, the peso opened at 59 flat, weaker than its previous close of 58.93. And when the peso weakens, stocks often struggle because companies face higher import costs, more volatility, and potential foreign exchange losses. All of that makes investors more cautious. On the corporate front, DigiPlus Interactive has signed a convertible notes agreement to acquire a controlling stake in Hong Kong-listed International Entertainment Corporation, which operates New Coast Hotel Manila. The 12 billion peso deal will strengthen DigiPlus's entertainment ecosystem by combining its digital network with IEC's hotel and casino operations, boosting player engagement and customer experience. Chairman Eusebio Tanco says that the move marks a strategic step to bridging digital innovation with real-world experiences, creating a globally competitive entertainment platform. On another front, the Palestinian Minister of Foreign Affairs and Expatriates, Farsan Aga Bekyan Shaheen, arrives in Manila at a crucial moment for Middle East diplomacy as global pressure builds for a lasting ceasefire in Gaza. She is set to meet President Ferdinand Marcos Jr. this Wednesday. Minister Shaheen told Bilyonaryo news channels Follow the Money that she will convey Palestine's appreciation for the Philippines' support for peace and a two-state solution. Her visit is the highest-level Palestinian mission here since diplomatic ties were established 36 years ago. And she will be in the country until November 21st.
Once we talk about peace, then we can air out what potential we have in the future for a better relationship. So I expect that meeting to be eventful and fruitful.
Shaheen also pointed out that trade between the Philippines and Palestine remains minimal, a situation she attributes to Israel's continuing occupation.
So once we move more into the direction of independence, I think trade issues might be more freely tackled. Today there is a minimal trade. There is some sort of trade on Palestinian soap, juices, etc., but nothing substantial.
But do you see that to maybe in the future accelerate more?
Yes, of course. With independence and with building our economy, I believe that is a real fact to look forward to.
Despite the political noise, the Philippine business community remains confident in the country's long-term economic outlook. Leaders cite a stable banking system, healthy corporate earnings, and robust investments, which topped 6 trillion pesos in 2024. Regulators continue to uphold global standards to protect market integrity, even as business groups call for clearer policies and stronger rule of law. The private sector also reaffirms its commitment to ethical leadership, job creation, and sustainable growth, seen as critical to keeping confidence steady during this period of heavy uncertainty. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.